My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. Just when we get an amazing labor report, one that showed excellent job growth without a lot of wage inflation, a dream come true for the stock market, we couldn't appreciate it because we caught a nightmare of a story out of Ukraine. The Russians fire on a nuclear power plant complex, something that could have led to a tragedy of epic proportions. So instead of rallying on news that should make Fed Chief Jay Powell's job a lot easier, we sold off again. Dow slipping 180 points, one time much worse than that. S&P tumbling 0.79%, and NASDAQ plunging 1.66%. Boy, is it sick, the NASDAQ. The Ukraine situation is turning into an absolute nightmare, one that no one can stop except Vladimir Putin. And obviously, that's not happening. We all wish we could do something to stop this crisis, but Russia is a nuclear power. And looking at Putin's unhinged behavior, we don't want to give him a chance to use them. I know it sounds like there's no hope, but as I told the CNBC Investing Club in our monthly meeting earlier today, I hope you joined it, we have to keep our eyes out for potential winners no matter what. I mean, look, consider the rails. They're soaring as a way to move commodities, especially coal, which has become red hot lately thanks to the global energy shortage. Consider any oil stock, any oil service stock, any utility stock, or the safety stocks we talked about just last night. They are working even as tech, led down by endless rumors of weakness, just roll over no matter what they say. I mean, look at the drug stocks, will you? So what does next week look like? I don't know. I think we got to go to our game plan because you'll see how treacherous this market can be. We're going to have to parse through the weekend's Ukrainian news on Monday because we now know it matters much more than pretty much anything that's here, including the unemployment report, the big daddy of the most important report there is. The decline in stocks after that great employment report really was eye-opening. But on Monday, we have to consider what I think is one of the most exciting battlegrounds out there, and that's Kohl's. Yes, the department store chain with an analyst meeting. This is a pure financial clash. Activist investors claiming that management isn't doing enough to bring out shareholder value, and the company buying back stock hand over fist while doubling its quarterly dividend to 50 cents. Now, that's a pretty hefty amount. You could say, what do they have to do to make the activists happy? But you know what? I love unsatisfied activists. I think Kohl's is now a win-win situation for you because even if they don't tell a good story, the activist pressure will grow and management's much more likely to capitulate. Tuesday, we hear from there's a puzzling one, Dick's Sporting Goods. It's got a stock that's actually down nearly 5% for the year. I think it could be worth owning. This is a quality franchise with a terrific CEO and a business that I think should thrive post-COVID. I know the retailers have been up and down lately. Apparel was so bad today, oh my, to the point where many of these retailers have become too hard to call. But this one could be a buy both before and after the quarter. After the close, we have three kinds of hated stocks reporting. I think they'll tell us a lot about this tenor of the market. First, we have MongoDB. You know, that's one of the many database software companies out there that's growing fast, but losing a ton of money. Not too long ago, Wall Street used to love a company that grew fast and lost a ton of money. Now, they just feel total contempt for them. Next is Bumble. Now, that's an online dating platform with a stock that's down more than 75% from its initial highs. Maybe romance is dead? Then there's Stitch Fix, the online apparel play with a stock that's plunged from $75 less than a year ago to $11 today. Remember, apparel bad. All of these names live in the heart of the bear market we're experiencing. So Tuesday night will be a great test to see if any of them have fallen far enough to mark a bottom. Anything's possible. I recommend taking your cue from how these stocks actually behave. If it's even a little positive on uncertain earnings, then you may want to find some growth names in that sector with similar profiles that are making money and do survive. Wednesday, Campbell Soup reports, and it's worth watching because we've got a newfound love for the food stocks out here. See, we had a great quarter from Hormel. They liked it. They liked that McCormick quarter, the spice company. So now we got to see, well, maybe Campbell's gives you a moderate gains here. Now, I think if they just do a decent quarter, it will fly. Remember, there is always a bull market somewhere. They do have to get the raw cost down, though. If they're going to please Wall Street, they have to not talk about supply chain. You know, I'm a huge believer in cybersecurity. And with the wave of attacks to the likes of Russia, China, and North Korea, they couldn't be hotter. In particular, I've championed Palo Alto Networks, but also CrowdStrike, where CEO George Kurtz has built an excellent business. We saw him on recently. I suspect that CrowdStrike will deliver great numbers on Wednesday after the close. But once again, if inflation spikes that day, something happens bad with Ukraine, what I say here won't matter. SPACs have become laughing stocks, with only the extremely long-term oriented Cathie Wood seeming to champion them anymore. On Thursday, I've got one that I want to see whether they can wake up the SPACs. We hear from a company called Wheels Up, the highly promotional private jet company with a stock that's now down nearly 70% since the SPAC merger closed. It's an incredible dog. Can Wheels Up say anything to breathe new life into its stock? Because they are a boisterous bunch over there. I bet they'll tell their story loud and clear. But what matters is whether or not they can turn a profit. Remember, this is a cohort that didn't think profitability would matter, at least not at any point in the next few years. And now it's the only thing that matters. If you want to know which stock has the best chance of roaring higher next week, I'd put my money on Ulta Beauty, which reports after the close on Thursday. The consistency of this cosmetics retailer is, quite frankly, amazing. Could be the loyalty program. I bet its numbers will go up a great deal post-COVID. It's well-run. It's got great customer affinity, and it's a fine growth story. Ulta has it all right here, except it's not now and has never been a cheap stock. But sometimes that's what happens when you're the best of breed. And you know, I always say buy best of breed. Also, after the close Thursday, we get results from Docusign. Now, the number one question is, when can they shake off the COVID stock moniker? Docusign's such a great company with such a good product, and we know it's been used all over the place. The stock trades as though its growth is now a thing of the past. Sometimes I wonder if the thing has to spend a year in purgatory to see how it does versus the current quarter. Like Zoom, it's COVID's doppelganger. Docusign's a very good company with a very, very bad stock. Hey, how about Rivian? The bloom is sure off the rose for these nascent electric vehicle stocks, aren't they? Ever since the November peak in growth stocks, that's what happened. Rivian's prime example. Remember, this market has no time for money losers. It wants companies that make and sell stuff for a profit, especially when they return some of those profits to shareholders. Oil. That's just not the case with these newer electric vehicle plays that have been losers for ages now. Rivian's practically the poster child for this group. Well, maybe Lucid is. I don't know. Maybe Fisker. Maybe them all. Hey, on Thursday, eBay holds its investor day. I'm always getting questions about this one. I think it's now a pretty clear story about an exchange where you can sell anything. To me, that's worth something. But they did report a mixed quarter. Let's see what this new slimmed-down eBay really looks like. Maybe we'll take it for a test drive. Finally, on Friday, we have an incredibly important analyst meeting, ATT. Now, this is a company with uniquely terrible management. We're talking wall of shame bad, and I got no desire to touch it. But hope springs eternal for many of you who watch, so I'll listen to see if there's any reason whatsoever to think even remotely positively about this incredibly poor performer. Bottom line, if you're wondering whether we can have yet another hideous week ahead, just ask yourself, do you see the war in Ukraine ending anytime soon? Yeah, that's what I thought. How about Jacob in North Carolina? Jacob!
Jim Cramer, booyah.
Booyah, man, you got me.
Yes, sir. I just wanted I enjoy those pics you posted with your dogs on Twitter, by the way.
I love my dogs.
Yes, sir. But thank you, and I love your show. Love your show.
And a shout out, unfortunately, to Chuck Robbins, who's dealing with the death of his dog. And we all know that unless you have a dog, you just don't know what it means. Go ahead. I'm sorry. I had to be a little off base there. What's up, Jake?
Yes, sir. Dog lovers, of course. My question is about Regeneron. I know it's a stock you like. I got in late. Its stock has been range bound for several months, but it's outperformed the IBB. My question is it going to face tough comps ahead in the next few months due to the lack of sales?
Jacob, if that Eylea competitor had delivered, then yes, but they sure didn't. So I think you're in the catbird seat with Regeneron. I think that Len Schleifer, everybody thought that their Eylea product was going to be dinged. That product's harder to challenge than anybody realizes. I think you're in good shape. Why don't we go clear across the country to Denise in California? Denise.
Hi. Listen, Intel got a shout-out from President Biden at the State of the Union address, and I want to support U.S. chip manufacturers, but I'm down 10% and was contemplating a sell. What's your opinion, Jim, on Intel right now?
Oh, Pat Gelsinger, yeah, congratulations on that shout-out by the president. Yields 3%. The group is hated. Very low PE. There are some high-growth stocks in that are just being shredded. A lot of people are saying there's a lot of inventory in the system. They knocked down Mike Ryan. The Bears are in charge. I think Intel is not a stock to own. I'm sorry. It's just not. Not with all these great growth stocks going down every single day. Now, if you want to predict how the market will react next week, just ask yourself if you see the war in Ukraine ending anytime soon. That will tell you. On Mad Money tonight, Splunk is out of its funk, soaring higher today, with news that the bankable Proofpoint CEO Gary Steele is taking the helm. Could it be worth considering here? I love Gary. Don't make a move. He joins me tonight, then we'll find out. Then Allbirds hasn't left the nest since coming public, down nearly 20% over the past week alone. What does the move signal for the company and its peers? I'm checking out the newly minted POW players. And Twinkies are said to last a lifetime. But could investment hostess last just as long? Hey, I'm sitting down with the CEO, and he's got game. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.